Listen to what he said about the impact of AI on jobs and the overall economy. Let's watch.
Every industrial revolution leads to some change in social behavior. But I expect the economy to be doing very well because of AI and automation, and I expect, us to enrich our lives. Life quality will get better, of course, over time. Some jobs will go away. Many jobs will be new and invented. But one thing for sure, every job will be changed as a result of AI.
Mark Avallone, what do you make of those comments?
I think he's right, and we just don't know exactly how the world will change, but this is perhaps the biggest change in our lifetime. It may be perhaps since the birth of the internet, which Al Gore invented a little over 25 years ago. But I think that you're going to see this in little ways, and you're going to see it in big ways. And if we start talking about why this economy is going so well, I'm going to dovetail into technology improvements and ongoing efficiencies on every level from our technology sector. Look, one of the reasons we continue to see a rise in stock prices, we had strong second quarter earnings, is because of American ingenuity and the efficiencies and cost controls and the increased output from the American worker. And a lot of that comes from technology. The technology spend to continue that is what's driving a lot of the large cap tech, but also downstream tech size companies. So it's affecting daily life. It's impacting how businesses operate, and it's benefiting the stock market. And that's the big factor that's driving stock prices, in our opinion.
Absolutely, yeah. Well, and he also said, to your point, he said that he expects these big AI companies to spend $3 to $4 trillion over the next 5 years. I mean, it's an incredible amount of money that's going to be spent on this technology. Let's look at yields this morning because we are going to get second read of second quarter GDP at 8:30 a.m. Eastern, and we're looking for a 3.1% increase. That we think will be driven by strong consumer spending and steady business investment. So we're also going to get July PCE out tomorrow, and the expectation a monthly rise of 0.2%, 2.6% year over year. Mark, what are you looking for with this data as we kind of move ahead to the weekend?
Well, the headline data look to be very strong, and that's good on some levels, and I'm sure the White House is going to like these numbers, at least the GDP number, and they should. But if you want to get a bit wonky about the GDP, a lot of that is going to be because exports were significantly higher than imports. And that is a good thing for American manufacturers, make no doubt about it. But it's also because the imports slowed because of tariff uncertainty. So some of this, for economists who are going to dig deep, they're going to say this needs to be a little bit levelized, and the 3% number might be a bit high. But I'm not trying to sound negative on the economy. In fact, that could be a good thing for the Trump administration. Because if we have a 3% GDP and a PCE approaching 3%, the Fed may not want to take rate cuts as a possibility. So I think the normalizing that number because of the export-import gap, this tariff uncertainty shakes things out. But if you look at a normalized number, then the Fed may say, we can lower rates. The economy is not clipping at a 3% GDP, because it's highly unlikely that if 3% GDP was a normalized number, that the Federal Reserve is going to lower rates. I think the adjustment's going to actually work in the Trump administration favor.
Okay, interesting that you say that. Well, we're going to know in about 2 hours' time. Mark Avallone, thank you for being here. Appreciate it.